Oh man, what's going on with y'all boys, man? We back at it with another Damn. Anyways, we back at it with another video. You feel me? This is the trade we caught today. I got some live footage of when I was in the trade, but I kind of looked like a fucking crackhead. Like I was tired in the bitch. I just woke up and I hopped on the chart, seen the setup, took it, and I look like a crackhead. I'll show y'all the video of the live trade, but we're just gonna do a quick little brief overview on what I saw, why I took it, what made it look clean to me, what made it look good, and yeah, my strategy simple. It's really simple. So, we're gonna start off from like the 4 hour, 1 hour. So you come up to right here, and as you could, my chair, as you can see right here, pull up right here, we got a 4 hour fair value gap, right? Boom, a fair value gap. Look, this candle's high to this candle's high to next candle's three low. It's a three candle formation. It's very simple. You get the high, get the low of this candle, boom, drag it over. That's your 4 hour fair value gap. There's also one right here, but guess what? We don't care because time also has to be in alignment with wherever it's tapping into. So we have that for that fair value gap, right? And I trade the 15 minute. So taps into here. We're above our EMA, so that means we're very bullish. As you can see, we're bullish above the EMA. No point of trying to play this down and playing downs. So after that, so what I see is, can I replay this? So I hop up into the morning. I see this. It's 9 o'clock. I don't even think I'm awake at this time. Um, is that how the candle closes? Okay, then I see that candle and I'm like, okay, that's probably a high. So I Fibonacci is everything. Fibonacci is so key to my strategy. So after we get that tap and we're getting a reaction off of it and we're starting to break, these highs, these candles highs right here and push up, I get my Fibonacci, take the high or take the low, bring it up to the high right there. And all I'm waiting for is a pullback to the 0.62 or the zero point 0.5 area. The reason I didn't do the zero point 0.5 area is because look at um there really isn't like a 15 minute. Oh, so look, they had this 5 minute inversion fair value gap. So you could have played your entry off of this 5 minute inversion fair value gap right here. So this would be 5 minute inversion FVG. Boom, like that. Price comes back, taps into it, but look at the time. It's 9:25. I want Price to be tapping into the area I want to see get tapped into. I want to see it do it at around 9:45, 9:50, 10 o'clock. So 9:25 is not my trading time. Market hasn't even opened yet. So fast forward again, boom, market opens and instantly shoots down and taps into this 0.62 area. I like that a lot. But it's not my trading time yet. I could enter off of that, but it's not my trading time yet. Boom. Then we get this huge reversal reaction right here at 9:35. And then we're getting some rejection back to the downside around 9:40. Then 9:45 hits. Boom, it taps back in one last time. And that's when I entered my trade on the 15 minute. I entered this trade on the halfway wick. The content creator encouragement is an ICT concept. I entered, so you get your fib. You really don't have to use your fib. I just eyeball it and enter on the 0.62. So the halfway mark of this wick right here, you can use as an entry. And as you see, price pulls back. Because the halfway mark, it basically, if you go to a lower time frame, like the 1 minute, it's probably gonna be the halfway mark is probably gonna be like a 1 minute fair value gap or some shit on a wick. As you, and you can see it kind of like right here, or it was on the 0.62. So yeah, look, it lines up with a 1 minute fair value gap. So you could also play this on the 1 minute time frame, but I'm just strictly trading the boom. You could add an entry right here, stop loss right there, and then you could have aimed for whatever the extension is on the fib tool. I like to aim for the point 0.5 every time. Aim for the point 0.5. You could have caught you a 1 to 4 risk reward ratio. You'd have risked $100 to make 400. Yada yada yada. It's basic. Risk reward is important. I go for 1 to 3s minimum. So whatever. We're going back to the 15 because the 1 minute is a lot of noise. 15 minute, 5 minute, they're clean. 1 minute is just noise and a lot of choppiness, but you can get on the 1 minute. I know how to trade the 1 minute. Don't get it fucked up. They know how to trade the 1 minute, but it's more clean and less stressful trading the 15 minute. It's more simple. So 0.62 is your entry. That halfway mark of the wick, that was my entry, and then I put my stop loss below this structure level of these candles, the bodies of them, and this wick. So I could have put like a 30 pip stop loss, but I put a 40 and I just targeted a simple 1 to 3. I could have aimed for I usually do aim for the 0.5 like every time, but the reason I didn't aim for the 0.5 today was because on the prop firm challenge that I'm taking right here, this 50K account, you can't. Oh yeah, and I'm also gonna do like a documentary, a series on trying to get funded with this 50K account right now. Um, so yeah, with this account that I'm taking right now, you can't make more than 1,500 in a day. So if you make, cause it's like some rules or whatever, cause you gotta follow these rules and shit. So anyways, I ended up only aiming. I could have targeted this, but I would have made more than 1,500 on that trade. So instead, I targeted a 1 to 3, which, well, I really targeted making like 1,300 or 1,200. Yeah, 1,300. You see the equity balance. So I was like, all right, I'll target a 1 to 3.25 or some shit, and that ended up being like 13, and that was my target. And if we go back to the lower time frame, so since you get this 15-minute entry, if I was on another account or like a personal account, you can, you know, let price play out as you see, or instantly getting displacement to the upside. Then we get another entry on the 5 minute. Broke this structure. That's a market structure shift. Then we get a pullback into this fair value gap, and it's literally the same thing.
Got that fire, and he remind me like
What?
man.
Sorry, don't mind that. That's just some little shit I had in the background. Anyways, you could find another entry. So you do the same thing. So how I did it on the 15-minute, you could do it on the 5 minute. And you just get the low to the high. And look what lines up with that 0.5 area right there. And boom, you scale into your position and you enter again. But this time you're gonna like scale in with like half risk. So, and then your original position on the 15-minute, you're gonna move it either the stop loss halfway, so 20 pips after it starts taking off and displacing up. So that reduces your risk to half, and or break even. I'll just do it half because I wanted to stay under this structure level. And then then you can enter a second position with the same stop loss or under the structure level. And then I know it's kind of a lot on the screen right here. And then there's just all this equal liquidity, all these equal highs right here. I'm expecting to get ran to and targeted. And there's like a 15-minute gap. This 15-minute gap right here, another fair value gap. I was expecting this to get filled. So I want to see this whole white square get filled up. And then look, the 0.5 literally lines up exactly with with it getting filled up. The market books based off of the Fibonacci. The algorithm that moves the market is off of the Fibonacci. The Fibonacci is very key to understanding where price wants to go and how it wants to move and standard deviations and all of that fun stuff. So yeah, the Fibonacci is how the market books. I'm literally showing y'all how the market books. Like I can basically damn near predict the market. So boom, enter another position right here and same target, the point 0.5, and that's another 1 to 3. So risk 200 to make 2, 4, 600, walk away with 8, whatever, to make 6. So boom, we get this, and then boom, instantly getting rejection from that point 0.5 and that 5-minute inversion fair value gap. There's that 5-minute inversion I made earlier. It's still getting used, but it also created a new one, so you could use either or. It doesn't matter. You don't have to fill your screen up with a whole bunch of, fucking boxes and all that fun stuff. And let the trade play out. It kind of consolidated a little bit, but as long as it held this 5-minute fair value gap, I was confident that it was gonna keep going up. And then boom, we got this tiny little breakout right here. We broke these candles highs that told me that it's probably gonna start pushing up, and it does. And okay, my TP did get hit. See, this is not my original TP. My original TP was like, let me see, one. All right, a 1 to 3. So boom, my TP got smashed right here. That's where I took my profit. Cause you see, and it literally filled that box up. It was a little hair off, but that's why I just usually aim for like the majority of it getting filled or like the halfway of the box. Cause it'll respect the halfway line, so you could take profit at that halfway line. And if you really understood that the market was gonna keep booking and going higher, I wouldn't be confident in doing that because this EMA is it's below this EMA on the 5-minute, but on the 15-minute, that point 0.5 is right here. So you're probably expecting it to target this point 0.5. I took profits early, but you could get another entry perhaps because there's another fair value gap right here, 15-minute. You could play that, or you could play the halfway of the wick. 0.5 of the wick. Look, literally tapped the halfway of the 15-minute wick again. And it's going to go to the 0.5 and possibly this area. But it consistently goes to the 0.5 standard deviation. That's where I take it majority of the time. So, little pen. All right, come on. You're right. So, fast forward another 5 minutes. Boom, we're getting displacement back up to the upside. And TP smashed. And this is what price is currently doing. It's working its way up to this level. So, what I usually can like to do too is when I get a second position, right? And I get that second entry, I'll secure like half of that second entry right here. So I'll secure my first entry 100% every single time right here, or I'll trail it to the 1. So by trailing the position, let me just get rid of this one. So I'll take the second one, maybe possibly to the 1. It just depends, honestly. It honestly just depends on time and if the market's booking. And there's a whole bunch of factors that go into it, but I try to keep it simple. So you could target this one for the second, or you could just target a set risk reward amount, like a 1 to 5, 1 to 4. I mean, honestly, I'd be happy with just fully taking profit altogether at this 1 to 4. But so if you want to trail, let me get rid of this. If you want to trail your stop loss and try to soak up as much profits as you can, once you get um this candle pullback and then you get another structure break to the upside right here, you could trail your stop loss at a 1 to 2. So you got it going higher, you got price booking higher to this 0.5. Put your stop loss right here under the structure level. So like when it pushes up the first time into this gap, your stop loss should be low key like right here. You should be trailing your position. So boom, it pushes up right here. All right, I'm moving my stop loss right here. So if it ever pulls back, I guarantee profit and I don't let it go all the way down and stop me out and give me an L. You trail your position and you soak up profits. So as it does this, pulls back again, break structure with this white candle to the upside, I'm moving my stop loss right here at a 1 to 2. So now if it pulls back right here, I guaranteed at least a 1 to 2 profit. And you have to be disciplined and stick with that. And if you tell yourself you're going to do that, you do it every single time. You have to, execution is like the number fucking one thing when it comes to trading. Learning how to execute. People just don't know how to execute and follow through with their plan and what they tell themselves they're going to do when they're in a trade. They get too emotional, they get too involved with the money, and they just ended up, and they end up blowing up and fucking up every time. So stay focused, stay disciplined, stay locked in, and keep follow your plan. So break structure to the upside again. Boom. Does this rejection wick candle. When I see this rejection wick candle, I'm like, all right, this host probably finna book and touch this 0.5. So now that rejection wick candle is pulling up. Now it's at a 1 to 3. All right, bet. Now I'm gonna trail my stop a 1 to 3. Or I'll keep it like at 1 to 2.5. I want to see the halfway of this wick get respected. And it does. So it gets respected and it keeps booking up to the 0.5, right? And then when I see this get respected, I'll trail it up even more to a 1 to 3. See? Now the halfway of this week, I want to see it get respected. And as you see, it goes all the way up to the 0.5. And at that point, at the 0.5, I'm securing all my profit. But that second position, I'm going to keep trailing it. So that second position I had, let's say it makes this candle to the upside right here. Honestly, I'm just fully taking profit at that fat ass candle right here. But if you want to be greedy, like most of you niggas are greedy, which I don't recommend, then you could trail your stop loss to like a 1 to 5. After you get that fat ass candle, trail it a 1 to 5 or like a 1 to 4 or 1 to 4.5. So now you don't want to see it pull back. If it pulls back here, you get out and take your profit and keep playing it up to the 0.1 level. And this is honestly where I'd probably fully take profit and just be done, call it a day with a 1 to 6. Or secure like half of your position or 75% of your position, right? And put your stop loss like under this structure level or 1 to 4 or 1 to 3 or some shit. Under structure, just put your stop loss under structure, secure 75% right now, and then put your stop loss to the second standard deviation. And now you have a risk-free trade that's finna soak you up hella profits, basically. And you basically caught a 1 to 10. You risked $100 to make 1,000. So simple, so easy. One trade a day. Call it a day. You're done. And go enjoy the rest of your day. Go work out. Go read. Go make some money. Go do some side hustles. Just be productive and do things that are gonna practice discipline, patience, and consistency. And it's that simple. That's the trade I took. I'm gonna put it in. I'm gonna post the live clip in this video so y'all can see the whole trade I did. This is a quick little breakdown on what I do, how I see the market, what I want to see, and the setups I take. 15-minute is king. That's all I'm gonna say. And I'll post the live footage of the trade I took in the video. Catch y'all, buzz. Yeah. Niggas set. Nigga been hitting them push-ups. All right, Nah, easy. 15 minutes is king. On God.